Mark, great to speak with you again.
Hi, Melissa.
So the last time I spoke to you was just less than a week ago. And we were talking about the valuations of some of the legacy automakers, and in particular Ford. You're walking me through why you think automakers will actually do okay in the recession. Can you sort of walk through that again? Because I feel like people are concerned about that. They're concerned that when they get the supply chain disruptions straightened out and get the supply out there, that the demand will no longer be there because of the downturn in the economy.
Yeah, well, there's a big difference versus previous downturns, and I've been through 4 or 5 downturns. And usually when you go into a downturn in the auto industry, you have a good amount of inventory. You're spending a lot of money on incentives even before the downturn. In this downturn, at whatever the extent of the downturn, it is a very different scenario here. You have 2 years of pent-up demand where the industry, their volume has fallen about 20% because of the supply chain and COVID issues. That's about the average decline you usually see in a recession for the auto industry. So you could argue the volume decline has already happened. You have that pent-up demand. And yes, you have, interest rates up and, the consumer being stressed these days. But that being said, even if there is lower level of demand for the next, 12 to 15 months, the industry has to restock itself. The industry has about 1.1 million vehicles in stock. It usually has about 3 to 4 million at this point in time. So even if demand is down, the automakers will still be producing and recognizing revenues for that because they have to restock because of the last couple of years. And that is very different from any other downturn the industry has faced.
Hey, Mark, it's Tim, and it sounds like you're then referencing, really the core internal combustion engine business is something that needs to be valued more. Maybe I'm putting words in your mouth, but that ultimately Ford and GM, yes, they have the EV exposure. They're not given really any credit for their core business, and it almost seems as if that's the part of the business that, our EV is great, but I know you've pointed out that it's difficult to ramp up production in a supply-constrained environment right now, and that the core business they have is very strong.
Well, exactly. You're exactly right. The core business is extremely strong right now because of the limited inventory. They're doing a couple of things. First, they're spending a lot less money on incentives, which helps their margins. They're spending a lot less money supporting dealers in terms of what they call floor plan, which is interest rate support that they give them to hold inventory for a short period of time. They don't have that anymore. So going forward, as they restock and as you have this limited kind of supply and demand situation, it's going to be very favorable for that ICE, what's termed ICE business, the internal combustion business, which, by the way, provides the profits for all the investments in all the EVs that they're doing.
Mark, when you think about the path to profitability when it comes to, let's just use Ford as the example, Ford's path towards converting its portfolio to EV. Is there a magic number? Is there a mass number that the automaker needs to reach in order to make this a profitable venture? If you assume that the cost for batteries and some of the components will remain somewhat elevated just because the demand across the industry for limited supplies of these metals is out there and will stay out there.
Well, the magic number moves around a lot. And the reason it moves around a lot these days, Melissa, is because the input costs, particularly the elements, cobalt, lithium, graphite, those prices are high right now. The resources in terms of demand versus the expected production from automakers over the next number of years for EVs is quite dislocated. So as that price moves up, it moves the number that you mentioned around. And keep in mind, the auto industry is terrific at using economies of scales to drive down costs. They can't do that with these elements. The elements are what they are. It's the market price. So they're going to have to look at other means, whether it's the battery packs, the inverters, the motors that they use, to really drive a lot of scale to get the margins that they want.
It sounds like the number's got to be higher if you assume that the component costs are going to remain elevated as well.
Exactly. And the number keeps moving higher as you see those input costs go up.
All right. Mark, it's always great to get your take. Always nice to speak with you.